I have started this budgeting where I started with flexible budgets. We looked at what flexible budget is all about, and we looked at a very comprehensive question of flexible budgets. Now, not to worry, if you're just joining me for the first time, this is going to be uh, my lecture on cash budgeting, operational budgeting, and I'm going to solve one question once more on flexible budget. So if you have your pen, you have your book, you have your calculator, please jot down with me. We are going to be looking at cash budgeting, operational budgeting, what you call departmental budget, and we're also going to be looking at flexible budgets. We're going to be finding a way to look at these three budgets in a go. And all my questions will be coming from the ICAN past question and the ICAN study test. All right, so we'll not be deviating too much. Now, what is a cash budget per se? A cash budget is simply that forecasts or that tells us what an organization intends to spend and what an organization intends to receive. After all, that is what they call it. That's why they call it cash budget. So the cash or the amount an organization intends to spend in the future, which can mean next year, 2 years, 3 years, 5 years time, and the amount that an organization intends to receive in the future. The future can be next year, next 2 years, next 3 years, next 4 years. All right. So in your ICAN examination, you can be told prepare a cash budget using the information given above. And trust me, the ICAN cash budget is not as easy as you think it will be, or as easy as you must have done it at your foundation level or at your university undergraduate level. There's going to be some element of technicality in your cash budget. So I will want you to stay with me till the end. All right. So we're going to be addressing cash budget. So please note that in your cash budget, we are only capturing only cash sales, that is cash inflows and cash outflows. Any transaction that does not involve the movement of cash should be eliminated, should not be captured into that budget. Please take note of that. A budget is simply a quantifiable statement or a quantitative statement that measures what you intend to spend and what you intend to receive. There's no rocket science in the definition. It's as simple as that. What you intend to spend and what you intend to what you intend to receive. So there's no rocket science in that. But when the question tells you to prepare a cash budget, it means that it should narrow your scope to capturing only cash receipts and cash payments. Now, cash budget is one of the simplest budget, but you require at advanced level, you will require some technicality, to be able to approach such a question. We're going to be looking at these questions today on cash budgeting and several other budgets, so you'll be able to cement your understanding on it. Now, apart from cash budget, we also have what we call operational budget. Operational budget has several names. They call it departmental budget. Okay, they may call it departmental budget. So examples of this operational budget include sales budget, okay, just like a budget that is prepared by the sales department. That's why it is called operational departmental budget anyways. It's a budget that is streamlined to a particular department or division. So you can see your sales budget, you can see your purchases budget, you can see your material usage budget, you can see your material purchase budget, you can see your, what do you call it, your production budget, you can see your labor usage budget. So all these are actually operational budget. Now, many students find it difficult to prepare this operational budget because they don't know what should go into this budget or not. Today, I'll be simplifying the whole process. After today, you'll be able to attack any budgeting question, whether it is examined by ICAN, whether it is examined by CIMA, whether it is examined by ACCA. You'll be able to profile solutions to it. Just stay with me till we are done. Now, apart from operational budget, we also look at flexible budget. Now, flexible budget are budget that are not fixed. All right. So, one thing about budget is that some budgets are fixed during the budget period. Now, if you prepare a budget for 3 years or for 5 years, the budget may not change even when economic condition is changing. So, for example, you budgeted that you're going to spend 6 million naira on a yearly basis for fuel. That was the budget. Now, normally, the fuel cost may not be stagnant over the 6 years or over the 5 years that you have budgeted for. So at least you should give room for slack. You should give room for variability. You should give room for economic changes. Now, when you decide not to give room to economic changes, variability or slack, it means that you're operating a fixed budget system. It means that the budgeted amount would not change no matter what. But when you're operating a budgeting system that has to be fluctuated, that has to be tweaked, that has to move as activity level is moving, it means that you're operating a flexible budgeting system. So ICAN will want you to say, okay, prepare budget, prepare a flexible budget based on the following activity level. It means that they want you to prepare a flexible budgeting. Okay, then we want you to prepare flexible budget. So whether you are told to prepare a flexible budget, whether you are told to prepare a cash budget, or whether you are told to prepare any kind of operational budget, you are good to go. Okay, you are good to go. There is no issue regarding that. I hope I'm communicating. Now, let's commence with this. Let's commence with our operational budget because I think that is what is a little bit challenge for many students how to prepare an operational budget. Now, I'm going to be solving this question. Okay, I would like to be solving this question that is found in your ICAN study test. This is an ICAN question. If you're familiar with your ICAN material, you say this is an ICAN material, updated one. Now, this particular question demands us to do so many things. Now, it says required under A, all right, under A, prepare a functional budget for sales. That is to say, prepare a sales budget, production unit. Now, it says production unit. It did not say production in Naira. So you have to be very, 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 very attentive to instruction because we have production budget in unit and production budget in value. So when a question is saying production unit, you must stick to what the question is stating. Okay, you must stick to what the question is what is stating. So we're looking at production units. I used to say we're going to prepare a budget that is in line to production in unit. Then we also look at material usage, material purchase, and labor purchase. We're going to be looking at how to prepare each of these budgets. Then finally, we're going to prepare a budgeted profit and loss account for the period. Now, looking at this question, what comes to your mind is that I have about 1, 2, 3, 4, 5. I have about 5 budgets here to prepare. And these questions are given to me. Now, how do I know which of these informations goes into each of these budgets? That is the first challenge you're going to have. Now, if you were told to just prepare a material budget, for example, you would have believed that any information that ICAN is giving to you would just be information related to material budget, just one budget, because ICAN will always ask you to prepare a material budget and you only have the information relating to that budget. But in this case, you are told to prepare in fact, 6 budgets, because after all this budget, they now told you to prepare profit and loss budgets. That's another one, that's 6. Then you ask yourself, each of these budgets, which of these informations goes into which? You need to be able to understand that. I'll be showing you the dichotomy today, okay? So you'll be able to know which information goes into which whenever you're preparing any budgeting question. Now, the first thing you want to do is sales budget. And trust me, if I can repeat this question, if I can decide to bring this question, the most easiest among them all is your sales budget. Now, what is your sales budget? Your sales budget tells you what you plan to sell in quantity and in value. What you plan to sell in quantity and in value. So for the fact that the question says prepare a functional budget for sales and they did not specify sales in units or sales in value, it means that your report or your budget should show sales in unit, sales in value. In fact, the sales in unit will be given to you in your question, and the sales per unit will also be given to you in your question. All you only need to do is to get your total sales. Now let's go to the question and look for 2 things. There are 2 things that is needed whenever you are preparing a sales budget. You need your sales in unit and your sales in quantity. If you can find these 2 information, preparing a sales budget is very, very simple. I repeat, sales in units, your sales in quantity. These are the only 2 things that you need. I believe that you are jotting. You're not just listening to me. Have your pen, have your book, and jot down points. Don't think that you watch the video again. There may be so many videos for you to watch. So start jotting now, start learning immediately. Now let's look for those 2 things: sales in quantity and sales value per in unit. Now X Limited makes and sells 2 products, product X and product Y. So X Limited is the company, they make 2 products, product X and so what is happening to product X and product Y? Its sales budget for next year is to sell 2,500 of product X. You see it now. They're giving us the quantity to sell for product X at a sales price of 410 naira. So we have already been given the sales in unit and the sales in what? In value. That's the 2 things we need for product X. Then 3,200 units for product Y at a sales price of 400 naira per unit. Now, if I have this information, I do not need to begin to read further, except if I just want to confirm 1 or 2 other things. The information given to me above is sufficient for me to prepare my sales budget. Now, what do I do? Go with me. Okay, this is my sales budget. This is my sales budget. Number 1, A, sales budget. I told you I needed 2 things: the sales in quantity and the sales price per unit. Remember that we have 2 products in the question, product X and product Y. Now, how many quantity of product X are we going to make? 2,500. And how many quantity of product Y are we planning to make? 3,200. I am not the one giving you these figures. They were expressly stated in the question. 2,500 and yeah, you guys, 3,200. It's very simple. All right, very, very simple. So that's why we'll pick 25 and 32. Okay, let me just make this bolder so you can see my screen. Now, when you multiply your 2,500 quantity by 410 naira, that gives you 1,025,000. You can punch your calculator and confirm with me. Then if you punch 32 times 400, you get 1.280 million. That means that the total sales that we are planning to make for X is 1,025,000. And the total sales we are planning to make for Y is 1,280,000. Combined figure gives us 2,305,000. Are we on the same page, please? You can talk to me via the chat box. Are we together, please? Combined 2,305,000. That's our total sales. That's good. Now, you may be thinking that you are a champion now because you have been able to prepare sales budget. Sales budget is for kindergarten. In fact, creche, those people that have not even grown teeth, those are the people that they give sales budget to prepare. Are you getting it now? Now, once you begin to move forward, you begin to see advanced budgeting requirements. So let's move. The next one is stating that we should prepare our production budget. This is also for, let's say, for creche. They still have about 2 teeth at the front of their mouth. So creche will be preparing a production budget. Now, how do you prepare a production budget? Do we have to cram a formula? Do we have to cram a format? What do we need to do to prepare a production budget? I tell my people, there's nothing for you to cram here. You are not cramming anything. So our benchmark for preparing a production budget will be memorizing or understanding the trading profit and loss account. Okay, that normal account that JSS1 people usually solve in business studies. That's what we are looking at here. All right. So let's just sketch the account here, even if we have it here. Let's just sketch it again here and see how we are able to use to prepare our production budget. Now let's assume that we have a naira here. Please travel with me and a naira here. Now, if I have sales, for example, and I have a figure here, watch me, and I have cost of sales. And under my cost of sales, the thing that we have there is our opening stock, which will be here, and we have our purchases, okay, which will be here. Please note that this purchases is also known as production, because for a trading company, it is called purchases. For a manufacturing company, we produce it. Now, when we add both together, that will give us one figure. Then we'll not take out our closing stock from it. Then once we take out our closing stock, that gives us another figure. Then we'll take out that figure out from our sales, and that will give us our gross profit. I hope you are familiar with this thing, our gross profit. Now, once we have something like this, we are able to prepare almost all kinds of budgets. Now, let's start with our production budget. Production budget simply means that we're looking for, this is production in units anyways, we are looking for our production figure. So in this particular table that we have drawn, this particular format that we have drawn, our production is this purchases here. All right, our production is this purchases here. So we are looking for this. So this is missing. But you have sales, you have opening stock, you have closing stock. Gross profit are just answers that we get, but these are the main thing. Closing stock, opening stock, and sales. Then we are looking for production. So since we're looking for production, what we can do is to say sales, Abi, watch with mathematics. This opening stock is positive, isn't it? You can now say minus opening stock. This is production you're looking for. Forget about production. Then come down to the next one, closing stock. Closing stock is negative, so change it to positive. Plus closing stock equals to any answer that you get to become what? Production or purchases. Please, if you are with me, let me know. Let me know. Please, kia. Are we on the same page?
Yes, sir.
Yes, sir.
The women, the ladies, are we on the same page?
Yes, sir.
Thank you very much. So since we know that our sales is given to us,
Yes, sir.
our sales is given to us in unit, Abi, 25 and 32. That's why we have 25 and 32. Then what about our opening stock? Is our opening stock given to us? It's quite simple. Let's go back to the question and check if we have opening stock for X and Y. Let's go and check. We've not actually read the question in full. Okay, so let's do justice to this question in full first. Okay, before we start speaking this thing. Now, the following cost information is expected to apply in the next year for product X and product Y. Please, one thing I want you to understand is that product X and product Y are finished goods. Because this is a manufacturing company. Okay, this is a manufacturing company. These are finished goods. So these are finished goods, but material A, B, C are raw materials. I don't want you to confuse yourself. So finished goods are product X and Y. The things that we need to make these finished goods are your raw materials, which is material A, material B, and material C. When we are preparing the sales budget, we prepare sales budget based on product X and Y because what we sell is product X and Y, not material A, B, C. Check it out. Our sales budget was based on X and Y. So any budget you are preparing, you must ask yourself, am I working with the finished goods or am I working with the raw materials? So in this case, we are working with the finished product for the sales budget. That is why we work with product X and Y. The next one is production budget. What are we producing? We are producing finished products. That is why we're also working with X and Y. Some students find it difficult to relate. They will say production budget. Since I'm converting the raw material into production, let me use the raw material as my analysis here. No, you are producing finished products. I get it now. So that's why we are having X and Y in our answers here. So let's go on. Now, if you check it out, material A, we need 1 kg and cost per unit of X is 30. Material B, we need 0.75 and cost per unit of X is 60. Am I making sense now? Material C, we need 2 kg and cost per unit is what? Is 60. Am I making sense now? So the same thing here also for product Y. The usage was given to us and the cost per unit of what? Of Y was given to us. Then if you check it, this is our direct labor, the labor that we're going to put in place to convert the raw material to finished products. So we have grade labor 1, grade labor 2. Grade labor 1 will work for 1 hour. Grade labor 2 will work for 1 hour, 50 kobo. Am I making sense now? 100 naira per hour, 80 naira per hour. This one here, 30 naira per kg. 1 kg costs 30 naira. Okay, so if you do 30 times 1, you will get cost per unit of X is 30. If you do 80 naira times 0.75, you will get 60. You can be confirming it to 80 naira times 0.75, you get 60. 30 naira per kg. How many kg do you use? 2. So 30 times 2 give you 60. The same thing here, 30 times 1 will give you 30. 80 times 0.50 will give you 40. 0.3 times 3 will give you what? 90. That's the analysis there. You must understand how I can got these figures. They are quite very simple. All right. So the same thing for your direct labor as well. For product Y, direct labor for grade 1 will be 0.80 times 100 will give us 80. Then 80 here times 1 will also give us 80. So you need to know grade labor, how much you are paying for 1 hour and how many hours each of them are working per unit. Okay. All right. Now, they now give us the following opening and closing inventories are budgeted. So this is what we need now to proceed with our solution. Now, they gave us for X and Y, which is finished product. They made it clear here, finished product. And they gave us opening and closing stock for material A, B, and C. So you have to be very careful. So this is the cost, 370, 320, and this is the unit of opening inventory. So for material X, we have an opening inventory of 300 units. For material Y, we have an opening inventory of 150 units. If you multiply it by the cost, you're going to have total of 48,000 and 111,000. Add both together, that gives you 159,000. This is not hard. At the other side of it, they give us the closing stock. So if we open with 300, we are closing with 200. If we open with 150 for material Y, we are closing with 100. Then for the material side of it, we're also giving the opening. This part is opening. So these are the opening 400 kg, 450, 150. And these are the closing 380, 400, and 120. Apart from the kgs given to us, they gave us the costs of these things. So please take note of that. Now, going back to our solution states that we have already gotten our sales, but we need our opening stock of finished products.
You want my password?
Please mute from your end now. Please, you are just joining the class. Please mute.
Just begging.
Okay, maybe I'm going to take you out. I'm trying to mute you and you are not muting. Please mute from your end to avoid me taking you out of this class unless you will not be able to join again in the next class. It's as simple as that. That's fine. Now, our cost of sales, we have opening stock of finished goods. We are looking for opening stock, isn't it? That's our next thing here, opening stock. After sales, we have opening stock. So I've already told you where opening stock is. What is the opening stock of finished goods? Let's go back to the question. X and Y are our finished goods, and here's our opening stock. So we have 300 and 150. Very simple. You take that out, copy it, and put it here. 300 and 150. If you check, they're in brackets. Okay, they're in brackets. Why are they in brackets? Opening stock has a negative in front of it. So you are minusing your opening stock because we are working back. Okay, so you will minus your opening stock. Then when we move to closing stock, our closing stock finished goods, let's go and check the figure. Closing stock finished goods is 200 and 100. Copy it, okay? Control P and Control V, 200 and 100. They are positive because if you check closing stock here, it has a positive figure in front of it. We are good to go. 2,500 minus 300 plus 200 gives us production of 24. 3,200 minus 150 plus 100 gives us 3,150. This is how you can prepare a production budget anywhere in the world. It's as easy as this, except if there are other serious assumptions that the question has brought in. Maybe they are telling you some kind of things that the opening stock is 12% or so amount, or the closing stock is the average or so figure. Then you're not trying to get the answers. But once you get the answer, these are the things that appears in a conventional production account. Okay, your sales, your opening stock, and your closing stock. That's the basic three things that appears in your production budget. Please, are we on the same page before I move forward? Are we on the same page before I move forward?
Yes. Yes, sir.
Please, let's move to the next one, material usage budget. Now, for your material usage budget, that one should just tell you commonsensically that what you are budgeting for is the materials that you make use of to produce, isn't it? Which are material A, material B, and material C. So you will combine this material to achieve what? Your product X and product Y. So if you come to my solution, what I did under my material usage budget is that I put my material A, material B, and material C. Then I said these materials will be combined to produce what? X and what? And Y. Am I making sense now? So let's go on. Now, one thing you must understand is that when preparing a budget, there's always a flow. A flow means that there's a dependence. All right. So for you to be in professional level, it is dependent on whether you pass your skill level. So for you to prepare a material usage budget, it is dependent on you preparing a production budget. It means that you must prepare a production budget first before you prepare a material usage budget. If your production budget you prepared here is wrong, your material usage budget will be bandadash wrong. Am I making sense now? So you must ensure that you apply accuracy, not ICAN is marking step now. Apply accuracy as best as possible to ensure that your production budget is correct, so you are able to finalize with your material usage budget. Now let us see what material usage budget is talking about. Going back to the question, you realize that in making product X and product Y, we need material A, 1 kg. Am I making sense? You need material B, 0.75 kg. And you need material C, 2 kg. Just for product X only. I copied it and brought it here. So I told them that for product X, I need material A, 1 kg. Material B, which is falling there, 0.75 kg. Then material C, I need it for what? 2 kg. So if I need 1 kg of material A, and I am producing 2,400 units, are you getting it now? So 1 kg times 2,400 units will tell me that I need 2,400 what? Kg. Because 1 kg is equals to 1 unit of material A. There's 0.75 kg is equals to 1 unit of what? Material B. So 0.75 multiplied by 24 will give me 1,800 what? Units. 1,200 kgs of material B. Then 2 times 2,400 will give me 4,800 kgs of material C. Now, where did I get this 2,400 from? It is the 2,400 I got here under my production. So once I know what I want to produce, I will now know how many material to buy to make that production. That is the idea. So our production budget is very important if we want to get our material usage budget. So that means that if I know the amount or the quantity I want to produce, I'm going to use that quantity to determine the amount of raw material I should produce. When you know how many people you want to feed, okay, in your house, you will know how many paint of gari you should buy. It's as simple as that. When you know how many people you want to dash money, okay, you should know how much rewards you are going to reserve for that activity. It's the same thing here. So once you know what you want to produce, you should be able to determine the material you need to produce it. Are we on the same page, please? Are we on the same page, please?
Yes, sir.
Let's move
Yes,
to
sir.
let's move to product Y. For product Y,
Yes, sir.
what do we need for product Y? For product Y, we need 1 kg for product Y for material A, 0.50 kg for product B for material Y, and 3 kg for material C. So let's copy 1, 0.5, and 3. I'll come to you, please. I'll come to you asking question. So we have 1, 0.5, and 3. We are going to multiply it by this 3,150. That's how we put it here, 3,150, 3,150, 3,150. So 3,150 times 1 kg gives us 3,150. 3,150 times 0.5 will give us 1,575 kgs. Then 3,150 times 3 gives us 9,450 kgs. So these are the total kgs we need if we intend to meet up with our production. Now, when we add both together, that gives us our usage in kg. 5,550, 3,375, and 40,250. Then what we did was to divide it by our cost per kg. So how much is our cost to multiply it by our cost per kg rather? So we have 30, 80, 30. Let's go and confirm that figure. 30, 80, 30. These are our cost per kg. 30 naira per kg, 80 naira per kg, 30 naira per kg. So that's our cost per kg. Now, if we have our cost per kg as 30, so multiply 30 by 5,550. That means that we are spending 166,500 to purchase the whole of material A. If you multiply 80 by 3,375, it means that we are spending a total of 270,000 to produce the whole of material B. Then if you are spending 30 naira, all right, then that, and you are making 14,250. That means that you are spending 427,500 total. Are you getting it now? For material what? C. Does that make sense? Now, if you add all together, that gives you 864,000. 864,000. Now, before I answer any question, let's come down to the requirement. The requirement says prepare what a production budget in units. Then why are we preparing production budget in naira? Good. Now, your production budget in units stops at usage in kg, 5,550, 3,375, and 14,250. I decided to convert it to naira. It is not part of the requirement because I needed it in my profit and loss account here. Okay, I needed it in my profit and loss account. So I was just trying to do all my workings at a go. But for your own, you can stop here, then do this one as part of your additional workings again to prepare your P&L account. Can I entertain any question, please? I'm open to any question, please.
All right, sir. So, you said the sales, the opening stock is in bracket because it has a negative sign in front of it. So I've been looking at the question. I can't see any negative sign in front of, as you said.
Did you start with us from the beginning of this class? Did you start from the beginning or you just joined us?
I start from the beginning.
Okay, so if you started from the beginning, you realize that for us to prepare a production budget, we are making use of this table you are seeing here. This sales, cost of sales, opening stock, okay, opening stock, purchases and production, closing stock, and then gross profit. I told you in the question that we already have our sales. We already have our opening stock. We are looking for purchases here or production, and we already have our closing stock. So putting that in an equation like, we now have sales minus opening stock. Now, why am I minusing opening stock? Don't forget, I am working back to get purchases. And in mathematics, when you are working back, whatever is already in negative will become positive. Whatever is already in positive will become negative. So this is your sales minus your opening stock is positive. There's no bracket in front of it. It becomes negative minus opening stock. Plus your closing stock is already in negative. It becomes what? Positive. Plus what? Closing stock. This is more or less like collecting like terms. When you are collecting like terms, whatever is crossing the equal sign, the sign changes. So bringing it here, this is our sales, our opening stock of finished goods. Even if in the question it is positive, even in this question it will be positive. But when you are putting it in your table or in your format here, it becomes negative. Okay, you're going to take it out. Your opening stock, you're going to take it out of it. Then your closing stock, which conventionally usually subtract, will become what? Added. The idea is you want to get production. So if 2,500 is what you sold and closing stock is 200, if you add both together, that gives you the total of what you have available. Then minus 300, which is what you brought from last year. That should actually give you what you actually produced. I don't know if that makes sense. Let's do it like this. I've explained your question, but let's do this mathematics. So, for example, we have a lady here, okay, in this particular class. This lady is Bleggy. So Bleggy sold, so for example, maybe she sells snacks and she sold, for example, she sold 1,000 snacks. Let's say, let's call that an egg roll, 1,000 egg roll in a particular day. Or let's say in January, she sold 1,000 egg rolls. As at the end of January, she counted what she had with her, and what she had with her was 200 left as closing stock. What does this mean? It means that at the beginning of January, she started with 1,200. Do you agree with me? Do you agree with me? Do you agree with me? Are we on the same page? Should I come back?
Yes, sir.
Okay. So Blaggy sells egg roll. She sold 1,000 pieces of egg roll in January. From January 1st, she has been selling egg rolls. When she got to January 31st, she counted all the egg rolls that she has sold. It's 1,000. Now, as at that same January 31st, she now checked what do you call it? Show glass. I get it now. She now saw that she still have 200 egg rolls. That means that the total egg rolls that she had from in January is 1,200. Am I making sense now? Then she now realized that, she brought 100 egg rolls from last month, which was December, into January. If you take out that 100, which is what? Opening stock. If you take it out, that means that she only produced 1,100 egg rolls in January. Does this make sense? Talk to me now, accountant. Does this make sense? All of you are accountants in your company. Is that not what you do?
Yes, sir. It makes sense, sir.
It makes sense, man. This is common sense. So the same thing is happening here. So if you sold 2,500, I get it now, and you minus what you resume with for last year or last month, and you now add what is left at the period. When I take this person out, you will message me, I will not reply to you. When I take you out, you will message me, I will not reply you. Then you had your closing stock. That should give you the exact quantity that you produced. 2,400. So please take note that this negative sign is not in the question, but by virtue of us completing our production budget, we have to impute the negative sign for the opening stock and then positive sign for the closing stock. Please, I just want to give you just 1 minute. Are we on the same page, please, before I proceed?
I have a question, sir.
Please proceed.
The B from the materials budget, material purchase budget. The C, the B, the middle. I think we are multiplying 50 for the cost per kg.
Which
We are
one?
multiplying the cost per kg. The one at the after C.
After C.
You know, I think we are multiplying.
Is it
yes.
in the solution?
Under, yes, sir. Solution. Yes, sir. There is one
Yes.
270,000.
Yes, you are multiplying 80 by 3,375. It's not 50, it's 80.
Yes, sir. If we are multiplying it, I think the answer is 169,000 something, sir.
The person that gave me figure is wrong. So please note that we are multiplying it. Whoever gave me figure gave me a wrong figure.
Thank you, sir. 168,750.
3,375, isn't it?
Multiply yes, by 80. By 50.
Is it
by 80? 50? Okay.
By 80 now is 270.
Okay. I was wrong. Thank you, sir.
Yeah, 380 and 30, 80, 30. We got it from the question there. 30, 80, and 30. It's not 50. Is it here?
Okay. Thank you, sir.
All right. Sir.
I'm clear now, sir.
All right. So please, can we proceed? For those of you that are still with me, can we proceed? Can we proceed?
Yes.
Okay,
yes,
so let's move to requirement D. Requirement D says material purchase budget. Now, once you know the material you want to use, it means that you can now proceed to buy that material. That's the material usage budget. So material usage tells us the amount of material we want to buy. The amount of material we want to use. The material purchase budget tells us the amount of material that we are going to buy. So we need the final answers here: 5550, 3375, and 14250. That's the first thing that comes to our mind. Usage in kg: 5550, 3375, and 14250. The same principle that we use for our production budget, we're going to apply it here. Add your closing stock of your material and less your opening stock of your material. You get your purchase in kg. Once you understand this thing, life become easy for you. Now, we already have closing stock for these materials. Okay, that is, we'll just go and bring it. Closing stock for these materials. Let's come down and see it. 380, 400, 120. These are the materials here. 380, 400, 120. Let's bring it to our solution. 380, 400, 120. Those are the closing stock of our materials. Please add it together. Once you add it together, that gives you the total material that you had as at the beginning of the period. Then you now remember that, oh, there were some opening stock that came from last period. Please take out those opening stock from the total materials that you have. That will now give you the exact material that you should purchase in kg. So what is our opening stock? 400, 450, 150. Let's go and pick it out. 400, 450, and 150. That's our opening stock of material. So bring it out and take them out. 400, 450, 150. That gives us our material purchase in kg. 55530, 3325, and 14220. All right. Now I multiplied it by my costs because I want to get all my answers handy for the purpose of preparing my profit and loss account. I don't like stress. So that was why I multiplied it by cost per kg, which is 30, 80, 30. Let's go and confirm. All this material that we used there, 30, 80, 30. Are you seeing it now? 30, 80, 30. I brought it here and multiplied direct. 30, 80, 30. And once I multiplied, I got my purchases in Naira. It means that my company is going to be spending 165,900 to purchase material A. We're going to be spending 266 to purchase material B. I'm going to be spending 426,600 to purchase all of material C. Does that make sense, please? Does that make sense, please?
Yes. Yes, sir.
Okay. So if there's no question, we move to labor usage budget. Labor. How much is your company spending for labor? Now, if you check the question, we have two categories of labor. Now, the two categories of labor that we have, let's check. Where are you? This is it, direct labor. We have grade 1 labor and we have grade 2 labor. Now, both laborers are going to be combined to make product X and product Y. So we have grade 1 and grade 2. So in my solution, you will see the way I position them. I said grade 1 and grade 2 labor. Then I said to make product X, that's the first thing I want to analyze. Now, my laborers, we are going to be paying our laborers based on production. So how many am I producing? 2,400 for product X. So I'm going to be paying to make product X, which is 2,400. I'm going to be paying my laborers based on what they are producing. Now, the question told me clearly that if my laborers are put to work for 1 hour and 1.5 hours, 1 hour for 1 unit of usage in hour, 1 hour to produce for grade 1, I get me, to produce product X, 1.5 hours for grade 2 to produce product X. So that's what I did here. So watch me now. 1 hour and 1.5 hours just for product X only. Now, if you are spending 1 hour to make 1 product, and we intend to produce 2,400 units of our product, how many hours will you spend? You still spend 2,400 hours. Now, when you are spending 1.5 hours to make 1 product, and we are doing 2,400 products for grade 2 labor, how many hours are you going to spend in total? 3,600. Don't forget that what we are preparing is in hours, not in Naira first. It is at the end, we'll now convert to Naira. Now, for us to make product Y, how many are we making for product Y? 3,150. That's what we'll put here, 3,150 units. How many hours do we even need for 1 unit? Let's check the question, please. Now, for product Y, under product Y, we need 0.8 and 1 hour. 0.8 is the usage in hours for products for grade 1 under product Y, and 1 hour for grade 2 under product Y. So we have 0.8 and we have 1. Let's take it there. So we have 0.8 and 1. If we spend 0.8 hours for just 1 unit of product Y, how many units are we producing? 3,150 based on our production budget. When you multiply, you get 2,520. Then The next one for grade 2, we are spending 1 hour. Multiply by 3,150 units, you get 3,150. These are the hours that we are going to invest in making these products. So please add both together. 2,4 plus 2,520, you have 4,920. 3,6 plus 3,150, you have 6,750. Then, what is the cost per kg? Let's go and confirm our cost. Our cost is actually 100 naira and 80 naira for grade 1 and grade 2 labor. So that is why I brought in the cost there, 100 naira and 80 naira. So multiply it, 4,920 times 100 naira. That is to say I'm spending 492,000. Then 6,750 times 80 naira, I'm spending 540,000. Combine both figures together, you get 1,032,000. Are we together, please? Are we on the same page, please? Are we
Yes, sir.
on the same page, please? Is this the only person in my class? Are we on the same page?
Yes, sir.
Please. Okay.
Yes, sir.
Attendance number 2. Oluwafemi Adegoke, are you with us? Let me know who I'm taking out of this group. Oluwafemi Adegoke.
Yes, sir.
Omonu, are you with us?
Yes, sir.
Omonu, are you with us?
Yes, sir. Yes,
Oma,
yes.
are you with us? Oma, there's a name, Oma. Are you with us, Oma? Oma, are you with us? Okay, Oma needs to leave this class. Oma needs to leave this class. Then Victoria
Yes, sir.
Fasola. And you cannot answer since, sir. Victoria
I was
Fasola, are you
answering.
with us? We can't hear you. We can't hear you. Your speaker is not good. Victoria Fasola, are you with us, please? I know you're always here. Is she still here? Victoria Fasola, are you with us? Somebody is, who is unmuted? The breeze. Okay. All right, let's continue, please.
The network.
Can you hear me? Can you hear me, please? Can I continue?
Yes, sir. Continue.
Okay, so we are done with everything in A. Let's move to B. It's as simple as that. Let's move to B. So B is saying prepare a budgeted profit or loss for the period. Prepare a budgeted profit or loss for the period. What do we do for that? Since we are done preparing our sales budget, we are done preparing our production budget, we are done preparing our material usage, material purchase, and labor budget, it means that we are good to go to prepare a simple profit and loss account. Now, what do we do? In your profit and loss account or your budgeted profit and loss account, you already know that sales is there. Nobody needs to tell you that. Am I making sense now? Nobody needs to tell you that. So sales as the first thing, what's the figure for sales? You have prepared the budget for it already, 2,305,000. Find the figure, Ctrl C, Ctrl V, paste it there. You have gotten 1 mark. The next thing is your cost of sales. In your cost of sales, there's opening stock. Abi, there's opening stock. So please, your opening stock, we do not have anything like opening stock budget here. Your opening stock, 2,500 is here. Look at it here. 2,500. Please, it is your opening stock of raw material. Okay, because it's your opening stock of raw material that constitutes your cost of sales. So 2,500. Please copy it like this, 2,500, and bring it there. This is it. Then your purchases, you have already prepared your purchases budget. Where is that purchases budget? Where is the guy say for purchase budget? I think we did it. I think this is it here.
It's not 858, 500.
858,500. Look at it here. 858,500. So that's our 858,500. That's our material purchase budget, because our material purchase will form part of cost of sales. Then our labor uncle, here's our labor. How much is it? 1,032,000. Look at it down. 1,032,000. That's how we put it here. Is it? Now when we add all together, we got 2,120,000. Then our closing stock, just go and copy it. Closing stock of material. Look at it here. 153,000. That's our exact closing stock, 153,000. Copy it and put it there. Once you minus it, you have your 1,949,000. Take it out from this. What we have is our budgeted gross profit of 356,000. This is how you can prepare your budgeted profit and loss statement. Shikina, any question? Please ask me any question.
Sir, I have a question.
Proceed.
Hello, sir.
Please proceed.
Okay. Under this profit and loss account format you gave us, labor cost is not there. So how do we get that labor cost that you put there?
If you have done manufacturing account, you will realize that wages is under your trading account. So I do not need to put labor cost because I'll be complicating it at this level. What I want to get is not labor cost. I am including labor cost here because in your financial reporting, there's a difference between salaries and wages and wages. If you have done financial reporting very well, you will know there's a difference between salaries and wages combined together and wages. Wages is known as labor cost. When the wages is a direct cost, it will fall in your trading account. When it is combined, salaries and wages, it will go to your profit and loss account. So please visit your manufacturing account in your secondary school. You will realize that wages is always put in your trading account because it is a direct cost of production. Then when it now becomes salary, the one that are paying you as accountants, people that are not direct laborers in your company, those also now form as salaries and wages, which will now be your profit and loss. And don't forget that your profit and loss account begins after gross profit. From your sales to gross profit is your trading account. After gross profit, anything that you have is your profit and loss account. I don't know if that answers your question. Are we on the same page now?
Yes, sir.
Any question again?
Explain that again.
Where do you get your labor cost from? Please, we have done the labor cost computation. Please, this is labor usage budget. Okay, we've got 492,000 and we've gotten, let me clean this up so you can see it. And we've got 540,000. If you combine 492 plus 540, you get 1,032,000. Please help me confirm 1,032,000. That's how we got our labor cost. Is that clear? The person asking? Is that clear? Any further question, please? Ask me now before we proceed. Ask me now.
Sorry, sir. I think there is a question in 2018 November that is similar to this we are doing, sir.
Hallelujah. That means you can solve it.
We can try, sir.
Oh yeah, try it now. That's the idea. You can try it. Then drop the, what do you call it, the examination diet on the platform so everybody can see it. Then I'll also check the question. If it is similar, that means you should be able to do it. Should be able to do
Okay,
it.
sir.
Please, can I move forward? Is there any other thing? If somebody wants to ask any question? Okay, so I think we're on the same page, right? We're on the same page now. So since we're on the same page, let's go back. We have been able to do justice to this question. So this question cannot put threat in us again. Now let's look at another question that we can do justice to. I have this question, okay? I have this question from May 2022 question 2. Is in one May 2022 question 2. And I'm going to be searching out from here. Oh, okay. I'm going to be doing that from here. May 2022 question 2. So let's see. May 2022 question 2. I will just solve the. Actually, it's May 2022 question 2. Are you sure? Which one is Ezinwa? I'm sure people have not given me wrong distance. So let me search. Ezinwa.
Mega laboratories.
Not sure that is me. Look at it here. So let's confirm the diet. Let's confirm the diet. Okay, this is May 2022. Question 6. Question 6. Imagine I can test in 2 budget questions in 1 year. May 2022 question 6. Let's do justice to this. I will only solve the flexible budgeting question. Okay. I will leave this one for you to do as assignment. Then I'll move to solving one better question on cash budgets. Okay, let's look at this flexible budgeting question. They said the first thing you need to do is to read the requirements. It says prepare a set of flexible budgets for presentation to the production director to cover the following levels of production over a period of 3 months. So prepare a flexible budget, it's already clear that they want you to prepare a flexible budget. And whenever they are telling you to prepare a flexible budget, they must give you the activity levels that they want you to prepare that flexible budget for. In this case, the flexible budgets, the activity levels include 80,000 units, 100,000 units, 120,000 units, 140,000 units, and 160,000 units. This is 9 marks. So it's a good mark for you for a simple question like this. Now, AZ1 Nigeria Limited is a company which produces a single product on an assembly line. The budget personnel has been availed with the following information, which represents the extremes of high and low volumes of production, which the company will achieve over a 3-month period. So we are actually looking at a 3-month period, and the highest production that they can do is 80,000. The lowest they can do is 80,000, and the highest they can produce is what? 160,000. Now, if they make 80,000 units of their product, these are the costs they are going to incur at 80,000 unit capacity, which is also included here as 80,000 unit capacity. So when they tell you to prepare a flexible budget based on that same 80,000 unit capacity, it's more or less copy and paste. There's nothing for you to do. Everything that is here will also be whatever is going to be under the 80,000 capacity. Then they now told you that the highest level of activity is when the company is producing 160,000 capacity. These are the amounts you are going to incur if the company is producing 160,000 capacity. And if you check your requirement, you are also told that you should prepare your flexible budget based on 160,000 capacity. That means that you don't have anything to do under 160,000 capacity. Just copy everything here and paste it under 160,000 capacity. But where we are going to have issue is 100, 120, and 140. These are our basic. These are the 3 that they actually want to allocate mark to us. So that is why they are going to give you 3 marks for this one. For example, this one 3 marks, then this one is what? 3 marks. I think that makes up the 9 marks that they want you to compute here. Does that make sense now? All right, now let's do justice to this question. Now, additional information shows that supervision is a step function. Another word for step function means step cost, right? Step cost. Now, a step cost is a cost that is fixed at a particular period. It becomes variable again, and it's fixed for a particular period, becomes variable again. Now, it is going up. You know, when you're climbing a step now, it is going up. Sometimes it can be coming down, sometimes it can be going up. But I think in this case, it is a forward step cost. It is going up. Now, supervision is a step cost. To this end, one supervisor is employed for all production levels up to and including 100,000 units. Now, when you are producing, up to 100,000 units, only one supervisor is needed to supervise that production. Just like your examination hall now. ICAN would have calculated this hall, we are bringing in 500 students into this hall. So now, okay, this 500 students, let's put in 70 invigilators. So it depends on the number of students in the hall, the number of invigilators you're going to put in. So this also depends on the number of production you want to make, the number of supervisors you are going to give in. But the question now states that for higher level of production, that is to say, if you are going above 100,000 units, you will need an assistant supervisor whose remuneration is 640,000 will be added. So it's going to be a forward step cost. You are going up, all right? So it's fixed. It is fixed between the range of 1 to 100,000. But once it crosses 100,000, it goes up again and becomes fixed again, okay? Until the company increases, goes up again. So it is a forward step cost, or it's a normal step cost, okay, that you know. All right, so this particular question is actually meant for, let's look at, after infants, you have the crash. You know, nursery one. Nursery one should be good to solve this question without stress. You understand? Because I don't see anything here. This is more or less like 5 lines question. Now, what do we need to do? It's very simple. We just need to prepare a flexible budget. There is no formula to cram. There is no format to cram. The way it is given to you, that is the way you are going to provide it. No formula, no format to cram. So look at my solution. Look at it here. So we have 80,000. That's the capacity you are preparing for. AZ1 Nigeria Limited, flexible budget for 3 months. 10,000, 100,000, 120,000, 140,000, and 160,000. Don't forget that this 80,000, the answer has already been given to you in the question. This 160,000, the answer has already been given to you in the question. So what we are bothered about is this, and this. These are the basic. Now, in a flexible budget, it is important that you are going to differentiate your variable cost and your fixed cost. Please, it's very important. In your flexible budget, you must differentiate what is variable and what is fixed. All right? That is why I told that there's no format. So that's why I just have to put variable cost first. But if you check what I did direct material, indirect material. Let's go and check the question. Look at it here. direct material, indirect material. There's nothing like one must come first, or that one will come second, or one must come last. The way it is like this, just copy and paste, Control C, go back there and Control V it. Are you getting it now? So direct material, indirect material, direct labor, power, and repairs. Whatever you do not see here, maybe it's fixed. For example, this supervision. The reason why supervision is here, look at it. But the reason why you will not see it here is because it's not actually a variable cost. So if I put supervision here, I'm just going to put dash, 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 which doesn't make sense. So that's why I brought supervision down. Then you will see that you will not see rent, rate, and insurance. You will not see it here, but it's in the question. Look at it. Rent, rate, and insurance, but it's not a variable cost. How do I know? 360 was incurred when you are producing 80,000 units, and 360 is also incurred when you are producing 160,000 units. So it is not a variable cost, it's a fixed cost. That is why in my solution, I did not put anything related to that here. I just brought it down to my fixed cost. So there is no format like there's a standard way you have to prepare a flexible budget. All right. Once you are able to put your activity levels up, just break down your cost into variable and fixed. Put everything that is variable or put everything that is fixed down. It's as simple as that. Don't allow ICAN to go you and collect your exam fee. All right. Let's look at direct material. Now, when you are producing 80,000 units, your direct material is 3,200. But when you are producing 160,000 units, your direct material is 6,400. That means that it is a variable cost. It changes as your what? Your activity level is changing. Now, there are three costs that we must pay attention to, or whenever we are preparing our flexible budget. We're going to pay attention to variable costs. I'm getting it now. The who is this? Where do you get the labor? Why is supervision fixed? Please, we are coming to supervision, please. We are coming to supervision. We are coming to that, all right? We are coming to that. Good. So I said we pay attention to variable cost, semi-variable cost, and fixed cost. These are the basic things that will be an issue to us when we are analyzing this cost. Now, a direct material, everybody knows. Even someone that is doing ATS exam, writing costing, knows that any cost that is direct is a variable cost. That is to say, this direct material should be classified under variable what cost. So 3,200 from 80,000 capacity, and when you move to 160,000, it's now 6.4 million. It means that it's changed, which means that direct material is a variable cost. Is there anyone that have direct again? Direct labor is a variable cost. Let me just put V in front of it. V. Is there anything that has direct again? So I think these are the basic direct costs: direct material and variable and direct labor. So let's pick that. So for our direct material, okay, it's a variable cost. Now, whenever a cost is variable, the rule is to flex. Okay, whenever a cost is variable, the rule is what? Just flex the cost. I repeat, whenever a cost is variable, the rule is flex the cost. Flex the cost even means, align the cost to different activity level. Now, let's flex this cost. Now, at direct material, let's trace it down here. How much are we incurring for direct material if we're operating at 80,000 capacity? The answer is given to us already. Direct material will incur 3.2 million. And for 160,000 capacity, we incur 6.4 million. I get it now. So let's just do it there. 3.2 million and 6.4 million. That is direct, cheap answer for you to get. Are you getting it now? But I trust ICAN. ICAN is only marking 100,000, 160,000, 140,000. But I've already given you answer for this ones directly. Now, how do you get for 100,000 capacity, 120,000 capacity, and 140,000 capacity? All variable costs should be flexed. All right. So direct material is a variable cost. How do we flex it? Please come to my workings here. Direct material. I put it in bracket variable cost so you'll be aware. And flex it directly. When you are flexing, you will start from the lowest cost. 3,200 is the lowest cost under 80,000 capacity. That's what you are flexing. All right. You are always flexing the minimum cost, which is 3,200. So we are going to say 3.2 million divided by 80,000. How do I get 80,000? The 3.2 million was incurred when we were producing 80,000. So just say 3.2 million divided by 80,000. That is to say you get variable cost per unit. Because 3.2 million naira is the variable cost for direct material. If you divide it by 80,000, that will give you variable cost per unit. Then if you multiply it by 100,000, which is the next quantity that you are producing, that will now give us the total variable cost for 100,000 units, which is giving us 4 million naira. That's how we have this 4,000 here. 100,000 is already up here. That's 4 million. Now, what we are doing for 120,000, please, you still use the same 3.2 million divided by 80,000. You must use the card. Do not go and move to 100,000. So please use 80,000. So 3.2 million divided by 80 to give you variable cost per unit. then multiply it by 120,000. That will also give you 4,000. That's why we also have 4,000 here. 4,800, I mean. Times 120, yeah, that will give you 4,800. Sorry. That will give you 4,000. Sorry, please. That will give you 4,800. Are we on the same page? So that's why we have 4,800 here. So the last one is 140,000. Please do your 3.2. It must not change. 3.2 divided by 80,000. Then multiply by the 140,000 that is the quantity you are looking at here. 140,000. That's how we got 5.6 million. That's how we got 5.6 million here. Please note, whenever I can give you a variable cost, it is a pure variable cost. Do not do anything, just flex. How do you flex? The initial cost divided by the initial quantity. What's the initial cost in this case? 3.2. What's the initial quantity? 80,000. Once you divide it, multiply it by the next quantity that you're looking at. Multiply by the next quantity you're looking at. In this case, 100,000. In the other case, 120,000. In the other case, 140,000. You get the various figures that matches these variable cost. I'm going to give you just 1 minute. Are we on the same page? Are we on the same page?
Yes, sir.
Yes, sir.
Okay, thank you. Now, let's move to the next one, which is indirect costs. Indirect material, sorry. Now, indirect material, which is the next one here, is a semi-variable cost because it's not really a direct material. But if it is a direct material, we would have said it's a variable cost. But it's an indirect material, we would have to categorize it as a semi-variable cost. It is not totally variable. Now, a semi-variable cost is a cost that has variable cost in it and also has fixed cost in it. Please take note of that. If that is indirect in the exam, classify it as semi-variable cost. I said so. Okay? And a semi-variable cost is a cost that has variable cost in it and also fixed cost in it. Now, when a cost has variable and fixed, I told you separate it so that you can put the answer for variable cost separately from the answer of fixed cost. So in this case now, this 480,000 and this 800,000, they both have variable and fixed cost inside of it. We need to work on them to separate them. Okay, we need to separate them. And when we separate them, we will not take the one that belongs to variable cost to it and the one that belongs to fixed cost to one side. So please know this is 480 under 80,000 capacity, and this is 800. I mean, it is variable, but we cannot just call it variable cost. We have to call it a semi-variable cost. Now, what is the rule for a semi-variable cost? The rule for a semi-variable cost means separate the cost into variable component and fixed component. That is it. The variable component, once you have gotten the variable component, please flex the variable component because all variable costs must be flexed. I will come back again. When you have a semi-variable cost, rule number 1, separate the cost into variable cost and fixed cost. Rule number 2, flex the variable cost. You already know how to flex variable cost already now by now. So flex the variable cost. You don't need to flex fixed cost. Fixed cost is never flexed. Even in Shanghai, it is never flexed. In India, it is not flexed. It is only variable cost that is flexed. So let's go back to our solution. So let's go to indirect material. In my solution here, I said indirect material, semi-variable cost. I now gave you a note. I said separate the cost using high and low method. ICAN did not tell me to use high and low method. That's the fact. But the truth is that for this kind of question that has already given me information at low, which is 80,000, and information at high, which is what? 160,000. It means that the only way I can separate my cost is to use the H and L method. In fact, the H and L method is the most common method that I can usually test, and that is very easy to use. It means that I'm going to apply the high and low method in cost separation. If you have not done high and low method again before, please visit our videos in the past or find a way to go and watch a video on high and low method or read your notes on high and low method to understand what high and low method actually is. Are you getting that? To understand how high and low method actually is. Does that make sense now? So for the high and low method, what do we need? There are 2 things you need in your high and low method, and I will tell you for free. The 2 things you need to solve. Please, can you hear me? Can you still hear me?
Yes, sir.
Good.
Yes, sir.
The 2 things you need to solve for your high and low method is your quantity and your cost. Don't allow anybody deceive you anywhere. In the high and low method, once you just remember this class, just remember that you only need 2 things to solve high and low method: the quantity and the cost. Put your high here, put your low here. That's what you need. So in this case, what is the quantity in our question? The quantity that we are producing is 160,000 and 180,000. Which one is high? High means highest. 160,000 is high. Which one is low? 80,000 is what? Low. So we have 160,000 and we have 80,000. So that's why I put high 160,000 on that quantity. Low 80,000. Then the cost is the next thing. Let's go back to the question and pick the cost. Focus your mind on indirect material. We have 480 and we have 800. 800 is the high. 480 is the low. It's very simple. Copy it and put it there. 800 is under high. Look, this is high. Then 480 is under low. This is low. Does that make sense now? Now look for the difference. 800 minus 480 will give you 320. 160 minus 80 will give you 80. Please, any question? Ask now before I proceed. Please, ask now. Ask now, please. Are we on the same page?
Yes, sir.
Thank you. Now, since you have determined 80 and 320, the next thing for you to do is to get your variable, because you're trying to separate. So please divide your cost by quantity. So your cost, which is 320, will be up. Your quantity will be what? 80,000 will be down. So 320 divided by 80,000, that will give you 4 naira. So this 4 naira simply means variable cost per unit. So since I already know my variable cost per unit under my high and low method, the next thing I need to get is my fixed cost. For me to get my fixed cost, I'm just going to use a simple formula. Total cost, okay, is equals to what? Fixed cost plus what? Variable cost. That's the formula I'm using. It's simple. It's the same thing with this. Y is equals to A plus BS. So don't allow mathematics discourage you. Y is equals to A plus BS. This Y is total cost. A here is fixed cost. That's what we are looking for. BX means variable cost. It's very simple. So now, please pay attention. What is my total cost? I have two costs here, 800,000 and 480,000. Pick any one. Anyone you pick is correct. Hey, somebody in my examination, I have failed. Oh, hey, what's wrong with me? It's a lie. Oh. If somebody pick 480 and you pick 800, you still get the same answer. So in this case, we pick 800. That's the 800 you are seeing here. Equal to, what's our A? Our A is unknown. That's why we put A there. We don't know what A is. Then plus, our BX means variable cost. How do we get our variable cost? Please note that it is total variable cost, not variable cost per unit. So we have 4 naira as variable cost per unit. Then we now multiply it by quantity 160. Don't forget we have two quantity, 160 and 180. Why did we pick 160? We are picking 160 because the cost we picked was 800,000, which is this 800,000 here. If we had picked 480,000, our quantity would have been 80,000. So please, any cost you pick, it is the corresponding quantity that you are going to pick. Don't go and go. So therefore, our 160,000 is our quantity. Okay? So 160,000 times 4, it's what gave us, I think that's what gave us 640,000. And we have our 800,000. So if you take out 800,000 minus 640,000, that's what's going to give us our A, which is our fixed cost of 160,000. So in this particular question, it is a semi-variable cost because it is an indirect material. Why is it a semi-variable cost? Okay, it is an indirect material. Any cost that is indirect and is, look at it, and it's different, 480, 800. That means it's not fixed, it's changing. But we cannot tag it as variable direct because it is indirect is added to it. So because we are having indirect attached to it, we have to convert it from variable to what? Semi-variable. Go and check your costing very well, okay? Please, as it is done. So semi-variable cost. And I mentioned that for a semi-variable cost, it means a cost that has variable cost and fixed cost. The rule is that you are going to separate it, the variable cost and the fixed cost. So that's what we need to do. For you to separate, you make use of the high and low method. So it is the high and low method that we use to get our variable cost of 4 naira. So since we know our variable cost of 4 naira, we have to use the cost function, which is this y equals to A plus BS, or total cost is equals to total fixed cost plus total variable cost. We solve the mathematics and we're able to get our fixed cost of 160. Are we on the same page, please? Ask me now. Your exam is not far. Are we on the same page, please?
Yes, sir.
No, please, let somebody that I have not heard before talk. Are we on the same page?
Yes, sir.
Yes, sir. Yes, sir.
Okay.
Yes, sir.
Okay. All right. So now that we are done with this, we are done with all the solving. what do we bring into our solution? We're going to bring in the variable part into the variable side, and we're going to bring in the fixed cost onto the fixed side. Now, what is the variable part? Please don't forget that the variable cost per unit is 4 naira. So 4 naira per unit multiplied by 100,000 units that you want to produce here. What are you going to get? 400, Abi? Abi now? Then do 4 naira times 80. 4 naira times 80 will give us how much? 320, Abi. That's how we got this 320 here. In case you don't know. Please, this 320, don't go and think that I copied this. There's nothing like 320 in the answer here, 480 and 800. Because inside this 480, there's fixed cost inside. Inside this 800, there's fixed cost inside. So for me to get, whenever it is a semi-variable cost, once I have gotten my variable cost per unit, which is 4 naira, I just need to multiply it by all the quantities that I see up like this. I just need to multiply by those quantities. So 4 naira per unit multiplied by 80,000. That will give you this 320 you are seeing. 4 naira per unit multiplied by 100,000. That will give you 400,000. Multiplied by 120, that will give you 4,000. That will give you 480. Multiplied by 140,000, that will give you 560. And multiplied by 160,000, that will give you 640. Now that's good. Once you get your variable cost per unit, just multiply by all the quantities that you are seeing up. That will give you the answer that you need. Please, I'm on the same page, please. Now, if we're on the same page, the next thing we need to do is our direct labor. Let's go and confirm it from our question. That's the next one, direct labor. I told you that for the word direct to be there, it means that it's a pure variable cost. It's not a semi-variable cost. And if you check it now, we have 2 million here. We also have 4 million here. So it's changing. 2 million was when you produce 80,000. 4 million was when you produce 160,000. So it's changing. So 2 million and 4 million means it's a variable cost. And because of this direct, it means it's a pure variable cost. 480 and 800 is a variable cost. But because of this indirect, it's a semi-variable cost. Don't go and fuck up. So what do you do when a cost is a pure variable cost? When a cost is a pure variable cost, just flex directly, isn't it? So we have 2,000 and we have 4,000. So that's how we have our 2,000 here, and that's how we have our 4,000 under 160. So the only thing we are looking for is under 100,000, 120,000, and 450 and 140,000. So let's flex, right? So check here. 2 million divided by 80,000 times 100,000, which is the next thing that we are looking at now. Okay, look at it times 100,000. That gives me 2.5 million. I'm making sense now. That's how I got 2.5 million here. The next one,
Come again with that.
2 million, the original amount you spend.
Again,
2 million divided by 80,000. 2 million is the amount you spend. 80,000 is the quantity. When you are flexing, please start from the lowest cost given to you by ICAN. The lowest quantity here is 80,000. How much did you spend? 2 million. So 2 million divided by that 80. Any answer you get multiplied by 100, which is this next quantity you are looking at. That's how you got 2.5 million. Look at it here, 2.5 million. For you to get this 3 million under this 120,000, the same thing, 2 million, you will still work on that figure. 2 million divided by 80,000. Any answer you get multiplied by 120. That's how you got your 3 million. Check it out here. 2 million divided by 80 times 120. That's how we got our 3 million here. That's how we got this 3 million. I hope we're on the same page now. Let me do the last one. The last one is 140, Abi. Still do 2 million divided by 80,000. Multiplied by the 140,000 quantity, you get your 3.5 million. That's this 3.5 million you are seeing here. Please challenge my answers. Who is there? Are we on the same page?
Yes, sir.
Mary B, Mariam B, are we on the same page? Are we there? Okay. So I think the next one is going to be what? This power. Look at power. So power is 720 and 960. So who can explain power to me now? Based on what you can see here, who can explain power to me? Please, anybody at all. If you know your background is not noisy.
Power, sorry, sir. I think power is also a semi-variable cost.
Okay, what's your defense, please?
Because it changes, just like indirect materials.
Okay. But since direct is not attached to it, is that why you are calling it a semi-variable cost?
Yes, sir.
Okay. Any contradictory opinion? Any contradictory opinion?
Okay. To me, sir, I'll say it's a variable cost.
It's a variable cost. Oh yeah, now. Oh yeah, defend yourself.
Because at 80,000, so at 160,000 activity level, it was 960,000 naira. So definitely the cost was changing as the activity level was changing. So I can classify that as a variable cost, sir.
Was indirect material not changing from 480 to 800? Is your indirect material not also changing from 480 to 800? Any other supporting line,
It
please?
was, but because they included indirect material.
Okay. So this order
I'll go
was
with power.
okay. Okay. Yes, I can hear you. Please speak. Talk
I
now.
agree that power is a variable cost.
Is a variable cost. I think we're having network issues. Okay. Power, accountant in the house. Power, light. People are calling it variable cost. 720 and 960 was your backing, isn't it? Now, they did not put direct or indirect. But all of you are accountants now. If you're preparing your profit and loss account, please, where do you put power? Let's be more realistic. Where do you put power and lightning? Who can tell me? If you're preparing your profit and loss account, where do you put power and lightning?
Under
Under
expenses.
indirect cost.
Under indirect cost. So why is somebody telling me fixed variable cost there? Don't you know that whatever you are doing in ICAN is applicable in reality? If you are treating your power and lightning in your company, it's not under your profit and loss account you put power and lightning. Do you ever see power and lightning in trading accounts? Have you ever seen a trading account? Maybe I'm learning today. You are not responding again. Okay. All right, let's continue. So power 720 and 960. So a power will become a semi-variable cost. Okay, which means that it has both fixed and what and a variable component. Even the NEPA bill that they bring to your house, or the what do you call this thing? The prepaid that you are buying anywhere in the world is a combination of fixed cost and variable cost. And they don't paper away. Open the prepaid, get different prepaid, and you see the way they broke the cost down. One of the cost ranges, one of the cost is fixed. These are things that you need to know as an accountant. You need to dig deep. So this is it. Power is always, in many cases, 95.8, or let me even say 98.5% cases, power is a mixed cost. Even in Nigerian power system, if you work with NEPA, you understand that power is a mixed cost. So this is a semi-variable cost. 720, 960. Don't worry. It's not me that taught you a pure variable cost. It's a mixed cost. Okay, so let's go. 720 and 960, all right? So since it's a semi-variable cost, what do we do? Please, who can tell me the rule for semi-variable cost, SVC? Who can tell me sharp?
We apply the
Apply
method.
We apply
by
the high
dividing,
and low method.
Okay, to do
by
what now?
separating the variable cost, by separating the variable cost from fixed cost.
Okay, so let's separate the variable cost from the fixed cost using the high and low method. In case somebody want to ask, will they give us another method to use in your exam? No. ICAN is not that wicked. There are different methods, but ICAN will always give you this high and low, at least 99% assurance or 95% assurance that ICAN will always use high and low. So don't bother yourself, because the other methods are engineering methods. Okay, let's go. Power 720, 960. calculation. Kia. Now, power is a semi-variable cost. So what are the two things I told you that we need whenever we are using high and low method? The two things that we need. Anybody? Sharp?
The
We
cost
need
and cost.
quantity and
The
cost.
highest cost and quantity and the lowest cost and quantity.
Oh, these things are
Yes.
lovely. So for the quantity in the question, we have 160 high, which is highest, 80 low. Then what about the value? Let's go and pick the value. For power, what's 720 and 960? 720 is the low, 960 is the high. It's very simple. 720 low, 960 high. All these ones are kindergarten. Just minus it, you get 240. 160 minus 80, you get 80. For you to get your variable cost per unit, just divide it. 240 divided by 80, that gives us 3 naira. This is your variable cost per unit. Does that make sense now? Now, after you get your variable cost per unit, what did I say you move into? Move to getting your fixed cost. You don't need to allow anybody to tell you. Once you get your variable cost per unit, move to getting your fixed cost. Your fixed cost, you can use your cost function, Abi, and I've told you y equals to a plus bs. If it's too difficult for you to remember, just say total cost is equals to total fixed cost. I get things now plus total variable cost. After this one now, your brain should be able to remember this all the time because it's economic terminology. So what's our total cost? In this solution, we had two costs, 960 and 720. Please, which one are we picking? Which one are we picking?
You can pick any of them. Probably
Any of
Any
them.
of them.
That's what I want to hear. Any of them, not 960. Any of them. So in this case, we use 960. So what is A?
Or whichever one we are picking, we have to pick the corresponding low quantity.
Yes, you have to pick the corresponding quantity. Excellent. So what is the meaning of A in this equation? What's the meaning of A? Who can tell me? A is what?
Variable cost.
Who is that person?
Sorry, fixed cost. Fixed cost.
Thank
Sorry.
you for correcting
it's
yourself.
cost.
So this A is fixed cost. That's why we put it there. We don't know what it means. Then who can tell me BX? BX is what?
The variable
Variable
cost.
cost.
No.
Kwame, what's your question? Sorry.
What's BX?
Variable cost.
Total variable cost.
Total variable cost. Thank you very much. Total variable cost. That's why we have 3 naira times 160. This 3 naira is this variable cost that we got here. Then who can tell me why we chose 960? Who can tell me? Why we chose 960? Who can tell me?
So even if we choose the lower figure 720, we will still get the same answer, sir.
Why did we not pick 160 in this case? Who can tell me the reason why we picked 160?
Because I've already picked 960.
God bless you. Thank you. Because the corresponding cost for 960, the corresponding quantity for 960 is 160. So that's how we pick that. Sorry, darling. That's how we pick that 160. Thank you very much. 160 times 3 will give us 480. So 960 minus 480 gives us 480 fixed cost. So our fixed cost there is about 480 naira, isn't it? Now that we've gotten our variable cost per unit and our fixed cost, please, who can tell me how do we now get the variable portion of this cost here for power? What do we
By
do?
flexing the
By
flexing it to the
flex for me. Let me see. The first one will be what?
3 times 8.
Before I finish, there is a
Go ahead.
Now 3 times
3 times how much?
80,000.
God bless you. 3 times 80,000 gives us 240. The other one too, 3 naira multiplied by what? 100,000 gives us 300. Yeah. No, don't forget 1,000 is already up. So that I'm just putting 300 there. The 3 naira times 12, 120,000 gives us 360. 3 naira times 420 gives times 140,000 gives us 420. Then 3 naira times 160 gives us 480. Please, is this clear? Is this one clear? Can we proceed?
Yes, sir.
Oh yeah, thank you. Now, who can tell me about these repairs? Anybody repairs? What do we do to repairs?
So also classify it as a semi-variable cost.
As a what? As a what? Semi-variable cost. Semi-variable cost. Thank you. So we're also going to do it as a semi-variable cost. Repairs, semi-variable cost. So what do we need? We need our quantity and we need our value. Our quantity remains the same, 160, 180. Our value will change, okay? Our value will change. 800 repairs. 800 800 and 1.2 million. All right, let's just pick it there. 800, which is small, and 1.2 million, which is high. If you minus it, you get 400, and if you minus it, you get 80. Isn't it now? So 400 divided by 80 will give us our variable cost per unit, which is 5 naira. Please, once you get your variable cost, what's the next thing? Go to your fixed cost, Abi. So why is your total cost, isn't it? Pick any of these costs. Even if you pick 800, which is the lower cost, you will still get the same answer. So in this case, we are picking 1,200, which is the highest cost. I like I things. So 1.2 equals to A is our fixed cost plus BX is total variable cost. And for you to get the total variable cost, you will say variable cost per unit, which is 5 naira, multiplied by any quantity. But since we have picked 1.2 million, our quantity is going to be 160,000. That's how we have 160,000. If you multiply 160,000 by 5 naira, you're going to get 800,000. 120,000, 1.2 million minus 800,000 gives us 400,000. That's our fixed cost. So please, how do we get figures for repairs? One person should just assist me. How do we get the figures for variable cost for repairs? Are you answering my question?
Variable cost is 5 naira.
Oh yeah, what's your question, please?
I noticed that when we're flexing for power, we divided 2 million by 80,000 before multiplying it by 100. So the same thing for 120, you divide by 80,000 before you multiply by the next. But for when we're flexing for repairs, we just multiply direct, multiply by 80, multiply by 100,000 by 120. So I noticed the variation. Why?
It's not me and you. It's not me and you. When we're flexing for power, you and who was doing 2 million divided by 80? Are you sure you are looking at my screen? Check. Power is a semi-variable cost. We have to look for high and low. We have to separate it. It is the variable cost of 3 naira that we are multiplying. 3 naira times 80,000 for power gives us 240. We are not dividing by 80,000. Anytime you are dividing by 80,000, you are working on a pure variable cost. Anytime you are working on semi-variable cost, you are only multiplying your variable per unit by individual quantities you are trying to flex. So please check my screen very well so you will not be mistaken. 3 naira times 80,000 gives us 240 for power. 3 naira times 100,000 gives us 300,000 for power. Please, are we on the same page? Is it not clear?
Yes.
Yes, sir.
Thank you. So please do the same thing for repairs. Repair is a semi-variable cost. So how do we get these answers that we get here? That's why I like asking questions. So you people will be on the same page with me. You'll be thinking that you understand it, but your brain is telling you another thing. Until you talk, you will know that yes, your brain is confusing you. Please, how do we get 400? Kia, we don't have time.
The 400 is 1.2 million minus 800,000.
It's not me and you.
No, it's 5 naira time.
It's 5 naira times 80,000.
Yes, it's variable cost is 5 naira.
You see what I'm talking about? So sometimes you're looking at the screen, but it's the screen that is looking at you. Get it now. Please give me figure for this 500.
5 naira times 100,000.
Please let a man answer me because men, they have so many family problems. Man, how do we get this 600 that is here?
5 naira times 120,000, sir.
So we are on the same page, Abi. So we are done with all the variable costs. Let's go and check the question. After repair, we had supervision and we had rent, insurance, and rates. Now, rent, insurance, and rate is purely a fixed cost. It is 360 at 80,000 units. Then it is 360 at what? 160,000 units. It's a fixed cost. But when we go to supervision, there's a tweak or there's a twist. Anyone? Now, supervision is 800,000 and it's still 144,000. All things being equal, I repeat, all things being equal, supervision would have been a what? A what?
Semi-variable.
A semi-variable cost. But because of this additional information, that means that it cannot fall under semi-variable cost. It's going to fall under what? A step cost. And a step cost is usually a step fixed cost. That's the full name for it, step fixed cost. So a step cost is not a variable cost. So it's a step fixed cost. Does that make sense now? Now, that is why this supervision will fall under this fixed cost category that you see here. Now, let me explain the supervision again. We said that supervision is a step function. That is a step cost. To this end, one supervisor is employed for all production levels up to and including 100,000 units. That in as much as you are not producing more than 100,000 units, one supervisor can do the job. One supervisor can do the job. That's a fixed cost. Whether you produce 60, it's still one supervisor. Whether you produce 80, it's still one supervisor. Whether you produce 100, it's still one supervisor. But the moment, ladies and gentlemen, you cross 100,000 units, you will need an assistant supervisor whose remuneration would be 640,000 naira. Am I making sense now? It means that your fixed cost has gone up. So it is still a fixed cost, but it has increased. So it is a step fixed cost. So supervision will be treated as a fixed cost in this scenario, despite the fact that it was 800 initially at 80,000 and 1.440 at what? 160,000 units. Ladies and gentlemen, going to our solution, we're going to take 800,000 and put it under 80,000 and 100,000. Then once it passes 100,000, the question says that you are going to add what? You are going to add a new guy, which is going to be collecting 640. Please do 800,000 plus 640. You should get this 1,440. Confirm for me. 800,000 plus 640. You should get this 1,440. Are you with me?
Yes, that's correct.
So that 1,440 is going to be for 120,000 capacity, 140,000 capacity, and 160,000 capacity. Are we on the same page? So here it is fixed. Here it is also what? Fixed. Please ask me any question before I proceed.
President, sorry to take you back. I want to take you back to this repairs part.
To which part, please?
Repairs. This high and low method that we saw.
Please go ahead.
Okay. Why did we do the high and low method here to get 5 naira per unit? Then we now came here to do what y is equals to a plus bx. I just want to know why.
When you get your variable cost, y is equals to a plus bs is the formula you will use to get your fixed cost. Your fixed cost is 400,000. You've gotten it here. We've not used it yet. So cool down. We're going to make use of all the fixed costs that we have gotten. So your y equals to a plus bs is used to get your fixed cost. If you're going to do that for all of them, this one too, we did y equals to a plus bs, and we got 480, I mean something here, 1,000 here. But we have not used that figure yet. So please calm down. We're going to get to that. All right.
Okay.
So for your supervision, we have 800, 800, 1440, 140, 140. So that's fine. So the next thing that is on our mind is this rent, rate, and insurance. 360, 360. So 360 is fixed cost all through. So that's 360, 360, 360, 360, and 360. Then the next one is indirect material. Now, what do we do? What do we do? What do we do? If you check, our indirect material was a semi-variable cost. Look at the semi-variable cost. We've treated the variable part of it. So let's treat the fixed part of it. So the fixed part of it is 160. Look at it here. 160. We've calculated it already. So just put it there. 160, 160, 160, 160, 160. Move to any semi-variable cost that you have done before. Power. So power is a semi-variable cost. We've treated the variable cost. Let's treat the fixed component, which is 480. Is here.
480, sir.
480. So we have 480, 480, 480, 480, 480. Then finally, repair is a semi-variable cost. Our fixed component is 400,000. So let's treat the 400,000, 400,000, 400,000, 400,000, 400,000, 400,000. Ladies and gentlemen, there's nothing for us to treat in this question again. We are done. So your 9 marks is complete. All you just need to do is add up all these fixed costs. The same way you have added up all these variable costs to give you all these figures of variable costs. Okay. So once you add up your fixed costs, then your production cost is going to be A means what? Variable cost. B means what? Fixed costs. To check, I just put it there. A in brackets. It's in their brackets there. Then this is B, which is fixed cost. So add both together. That will give us your what? Production cost. Okay. Very simple. Please ask me any question. Any questions so far?
Excuse me, sir. Please, can you tell me how you got this supervision?
Which supervision?
This 800, 800, then 140.
Madam, don't sleep. You people should not sleep. I hope you've not slept. Then you will not come back and draw me back again. Don't sleep. Oh,
No,
exam is
sir.
closed. Look at
Okay,
it.
sir.
Where are you? Look at it. Your supervision. Supervision is 800,000 and 1,440,000. This particular additional information is very important to us. Okay. So this particular information, they said supervision is a step function, which is a step cost. To this end, one supervisor is employed for all production levels up to and including 100,000. We are going to spend 800,000 for supervision, no problem. But we are only going to be spending 800,000 for supervision every month if we don't produce above 100,000. That is why in our solution, when we produced 80,000, we spent 800,000 for supervision. When we produced 100,000, we spent 800,000 for supervision. But the question has said, for higher level of production, please, what is the higher level? Anything above this 100 that I gave to you here. So anything above 100, you are going to spend an additional money, which is 640,000. Please add 640,000 plus 800,000. That will give you 1,440,000. So that 1,440,000 is what you're going to spend for 120,000, because 120,000 is above 100,000. 140,000, you're going to spend 1,440,000, which is also above the activity level is 140, which is above 100,000. You're also going to spend it here 1,440,000, which is the activity is also above what 100,000. So any activity that is above 100,000, please incur 1,440,000 for them. I don't know if that is clear. Is that understood?
Yes, sir. Thank you, sir.
Any
Yes,
further
sir.
question, please?
So for the fixed cost, how did you get indirect material to be 160?
Indirect material. So for your indirect material here, it's a semi-variable cost. Your semi-variable cost, you have to break it down into variable, which is the 4 naira. Then into fixed is this part here. This is the 160 fixed cost. That's the 160 you see there. It's going to be 160 all through, no matter what you are producing. Any cost that is semi-variable cost, you must see fixed cost inside. So for power as well, we got the variable cost of 3 naira. Then we went further to calculate the fixed cost, which is this y equals to a plus bx. So the fixed cost after getting it is 480. Okay, it's 480. That's how you got this 480 for power. Are you getting it now? Then for repairs too, repair too is also a semi-variable cost, which is repair. All right. But we saw for repair, our fixed cost, which is FC, is 400,000. That's how we got this 400,000. So please note that any cost that is semi-variable cost, once you are splitting it, you are splitting into variable components and fixed components. So once you are done with the variable components, please come back and treat the fixed component. Don't leave it for ICAN to do it unless they'll collect the mark to themselves. I don't know if that is correct. Are we on the same page? Are we on the same page?
Yes.
Yes, sir.
Okay, ladies and gentlemen, this
Yes,
brings us
sir.
to the end of today's class. In our next class, okay,
Hold on,
we're going
sir. Sir,
any question?
yes, you said with the fixed cost, we've not treated it yet. We'll come back and
It's not me and you. Mr. Gabriel, it's not me and you. We have done the fixed cost here. Have you not done the fixed cost here?
when this lady asked you a question, you said she should what?
She asked me for I think for this indirect labor, Abi.
No, this y this y equals to a plus bx. You now said it's for fiscal. She should come down. We have not yet. We'll come and use the fiscal.
And we have used them now. Okay, stay with me. Oh yeah, stay with me. Answer my question. Direct material, is it a variable cost? Oh yeah,
yes, it's a variable cost.
it does not have
It's a
fixed
variable
cost,
cost.
Abi. It does not have fixed cost, isn't it? Indirect
Mm.
material, does it have fixed cost?
It's a semi-variable cost. It has fixed cost.
Oh yeah, how much is the fixed cost based on our calculation? Just look down, yeah, fixed cost, look down. What's our fixed cost?
It's 100,000.
You're on your own, oh.
Sorry,
I thought
160.
that this man is sleeping somehow. In one way or the other, he's sleeping. And it's 160, Abi. The
Yes,
other thing
sir.
is small. Okay. So 160,000. So let's look for indirect material here. Did you see indirect material here? What do we put there? 160,
Yes,
160, 160, 160, 160. So which other fixed cost are we looking at?
It's okay, sir. Copy, I understand.
Mhm. Are we on the same page before we round up this class? Are we
Yes,
on
sir.
the same page?
Yes, sir.
Yes,
We're on
sir.
the
So,
same
Mr.
page.
President, I have a question.
Oh yeah, ask please.
Uh, for exam purpose, what if we are given the particular cost whereby we can't achieve I mean, we don't know if it is a semi-variable cost. So how are we going to buy variable cost?
Are you going to do what?
Because the question you asked earlier concerning is it power? Yes, power. Because as for me, I don't know whether it is a variable cost or a semi-variable cost. So in exam, how are we going to identify such cost to be a semi-variable cost in case we are giving some other cost different entirely? So maybe there's a way
Thank
we can identify
you
such
very much.
cost, if know whether it is a variable cost or semi-variable cost.
I think I have said this repeatedly. Anyone that exclusively said direct is variable. There is no other cost that is variable except if that cost have direct in front of it. Any other cost, in as much as it is changing, will be semi-variable cost or a mixed cost. It's just that's the idea. So this is your power that you are looking at now. Even apart from the fact that you don't know that your receipt must have a fixed and variable component, it's 760 and 960. There's nothing like direct in front of it. It becomes a semi-variable. No mathematics. It's just like that. It's semi-variable. This your repairs that you are saying is 801.2. If there's no additional information to substantiate this repairs, it becomes a semi-variable because there's no direct in front of it. I don't know if that is right. If you are getting it, this rent, insurance, and rate. If here was 360 and here was 400, there's no juju. If there's no any other additional information, it becomes a semi-variable cost. No debate. If you like travel to Singapore, it's the same thing. If you like in China, it is the same thing. I don't know if I'm making sense now. So that's how easy it is. Except if they put direct. Once they put direct, it becomes a pure variable. As far as there's no direct there and the figures are not the same thing, it's a semi-variable cost. Are we good?
Right. Thank you, sir.
All right. Any further
Yes, sir.
questions, please?
Sorry, sir. I want to remind you about my request, sir,
After my class.
for Sunday. Okay,
After
sir.
the class.
Sorry, sir.
Or you can chat me or personally, please.
Okay, sir.
It's only him, all of us on Sunday.
Please,
We
this my
go
class is
church
on
now.
record. I would not want to be talking about other things in this recording. This thing will be sent on the
All right,
class.
all right.
Okay,
Any
sir.
other
It's
thing that
okay.
is affecting this one, just let me know. Ladies and
We are
gentlemen,
good.
I think we are good. We cannot proceed with solving this question because if we commence with solving Zitromas, which is a mega laboratory, trust me, everybody will sleep and leave only me in this place to provide solution to this particular question. Therefore, I rest my case. This is going to be in our next class. If you miss my next class, it means that you may not be able to solve a standard budgeting question, right? So this is a standard budgeting question tested by ICAN. So that's going to be in my next class, and I'll let you know what that class would be. Ladies and gentlemen, I remain Dr. President, and thank you so much for staying with me.